All right, let's jump into things. Where are we at? It's 10 past 10 on Wednesday, the 14th of Jan. So we're already sort of halfway through the month almost. So look, we had CPI last night. Look, it was a technical miss in the sense of sort of you had the market expectations and core CPI month on month came in just a touch lower, but the month on month came in as expected. Yearly came in as expected. Which 2.7, look, it's a funny sort of area because, 2% is the sort of overall universal target, and particularly, the FOMC, they've sort of said this, but like it's for all central banks. 2% is the target that they want, which gives you sort of like a steady growth. Um, so 2.7 is above that. They did change it when everybody was up at like, 6, 7%, all this kind of stuff of inflation. They changed these things. They had all these sort of fun little things that they put, and they said, look, 2 to 3% is an acceptable target. Then they had a thing which was like a variable target. So it's kind of like sort of saying that look, it doesn't have to get to 2%, but if we can add in a couple of the good months, couple of the sort of worst months, and then average it out, and that gets in the ballpark, then we're happy with that. But end of the day, 2% is the target, and we're kind of almost back to some sort of sense of normality, at least in terms of inflation and that. I mean, we're not dealing with what we were dealing with for multiple years there. And you've seen this because the focus has very much been on jobs, particularly with the US. But 2.7 is still technically above what they want. So you should sort of think that, you know, basically, if you're at target, then that's fine. They've got the room to potentially cut, because if you cut, it's generally going to exacerbate inflation. That's the sort of the trade-off to cutting, is that you're going to have more money in the system because that's what will help sort of stimulate the economy. But the byproduct of that is, well, there's more money in the system, prices will generally go up, because more money doesn't mean that the economy's worth more money. It just means that every dollar is worth a little bit less, i.e., inflation goes up. So the point that I'm getting to with this is that it's above target. It didn't come down. So short of this little month on month going to zero point 0.2 against zero point 0.3, which actually, you know what I mean, is just stable, actually, because if you look at the previous was zero point 0.2, so it just hasn't moved at all. It really, the picture, if you take out the expectation that you saw a little bit of a move up in the month on month, everything is exactly as it was last month. And the dollar got crunched off this in short term, and I'll get to this because I think this is a very sort of telling point at the moment. But the dollar got absolutely crunched off the back of this, and to a certain degree, kind of unfairly. Like it shouldn't really have sort of been hammered so hard, and we saw a big reversal afterwards. And I think that's the thing that's sort of telling at the moment, because we've had job numbers coming out have been poor. We've had, I didn't even see we had this last night, the ADP up a couple of hundred anyway. But the point is, we had job numbers coming out which have been poor. We had CPI now, technical miss, whatever, but still not great there. It got a knee-jerk reaction of getting absolutely smashed. We had the Powell situation early in the week with the Fed. All these sort of things, the market has digested very quickly and still bought up over the top. I think that's telling. I think that's sort of saying that, the market says, give us bad news, we'll still buy it. Why would you still buy it? Because you know it's going higher. And this is what I've been sort of touting, admittedly early. I've been very early for this one. I've missed it a couple of times and it's cost me a bit. But the point is that we may finally be starting to see a continued push in the US dollar. And I think these bits of data coming out, good or bad, if like the thing is, it's come out and technically it's bad in the sense, if it has to go in one camp, good or bad, well, it did miss there. Knee-jerk reaction was down. Market said, great, that's a buying opportunity. Let's do it. They took it past that sort of a data drop point and pushed up to the top side. So look, that was about it in terms of data news and that. Going through today, don't really have a lot sort of going on. I think sort of Asia is pretty quiet actually all through the week in terms of data. We got PPI tonight, so this will be an interesting one to sort of see what happens. I think all these stars, I think I saw the other day, it's still uh, release date 28 days now. Okay, so I think was this the one that they're giving out? they're still playing catch up. I'm not 100% sure. Anyway, we'll see retail sales. So retail sales, I guess this could be a little bit muddied by the idea that we had, Christmas, New Year's, well, maybe not New Year's, but like Christmas period. Here, retail sales expected to go up. I'm not sure if this number is adjusted for the seasonal sort of thing. Oh yeah, here we go. Yeah, it was this one. So we got October data of PPIs coming out as well. So it's still stuffing around a little bit with some old data. I assume this is probably the up to date fresh data. So we're getting like two lots at once. Just on that note as well of data being stuffed around, it's obviously due to the shutdown. They're now threatening another shutdown at the end of January, so in 2 weeks. So if we haven't got enough on the plate, so we got sort of obviously the Iran situation still ticking on. Trump came out with some tweet overnight, sort of saying, so hang tight with it all. So if I can just find, so yeah, here's this one here. So on Truth Social, I'm, I'm not surprised that this is still going, but does anybody actually use this other than just to see what Trump has to say? Anyway, Iranian protests keep protesting, take over your institution, save the names of the killers and the abusers, and ensure pay big, blah 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 blah. I've cancelled all meetings. Stop. Help is on the way. Trump. Bang. So look, it's still simmering along in the background there. It is something obviously that's part of the equation. Um, we've obviously got Greenland. It's just hard to really know what to really bank too much on here. I mean, there was headlines coming out sort of saying from the is it the president of Greenland? I'll see if I can find it. So I thought I could find it, but I can't. But anyway, the point is we got whoever the president of the president, I don't know, whatever, the guy in charge of Greenland. Um, he was saying, look, we don't want to be part of the US. We're not for sale, yada yada. We don't want to be sort of associated with the US. Blah, 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 all this kind of stuff going on. You got, the asking for NATO to sort of help support them. You've got a couple of these guys, the typical sort of players of UK, France, sort of kicking up a stink about this sort of stuff as well. Again, you just don't know where these things are really at, but it is something that's technically there in the background, part of the narrative. So all these things adding together still keeps the sort of risk-off factor happening. But the idea that, in my opinion, that Europe's going to sort of go to war with the US is just ludicrous. I don't think that's going to happen, particularly over Greenland. I mean, to do what? Enough of the virtue signaling of it, all this sort of stuff, and sticking up for the little guy and with it all. Like, see what the deal is. I mean, look, land's been bought before. Like, didn't you have Alaska? You had, what was it, Louisiana Purchase, these sort of things. Okay, maybe we're going back a little bit in time, but these things have happened before. And it's not to sort of say that it will happen. Who knows? But the idea that these guys are all going to kick off over that, as that's the tipping point. I don't know. I don't think so. Anyway, back to the charts, back to what's important. That's the data, both going through here. We've got a couple of Fed speakers tonight. After PPI, not really anything, and that's fine. So PPI is the one that we're looking for here. So let's jump onto the charts. We've got DXY, and this is what I'm talking about with DXY. It is respecting the chart very well. And this was I put a couple of posts up and I sort of said, look, that's all you'd ask of these things is just to respect the chart. As long as it's respecting the chart, then you can work off the levels and vaguely, I say, how to trade these things, and obviously what it means when the levels get taken out. As you can see, we've had a couple of bits of things. This was ISM last week. Was it last week or the week before, 6th of Jan? Jesus, things are moving along so fast at the moment. But this is ISM. Got smacked down, bang, recovered up through here. This is the job data, or part of the job data, ADP, that came out, kept moving forward through here. And obviously we had NFP into the end of the week, which is this little spot, jump up and down here, this little wick over the top over here. So as you can see, there's been numbers of things where the market's gone, oh, yep, great, let's sell it. Bang, that's recovered. Let's sell it. Didn't go too far on ADP. Don't expect a great deal off ADP. Bang, up here. Now, this last sell down here, this big hammer down here, this is the Fed situation with Powell coming out with his little video and that. And as you can see, it's actually sort of repeating a very sort of repeat sort of structure here. We come up, we test the levels that we're looking at. These ones here, You got a little midway point, overshoots that, and then sort of recovers. Got a little midway point here, comes in with the sellers, where we expect the sellers to be, overshoots, respects this chart here. So again, support resistance, same thing. Here's the resistance, lo and behold, it becomes support. It's not a surprise. You can see that this little middle level that I do have here, where I did think, if you look at the weekend video, this is where I was like, okay, I expect a little bit of weakness early in the week for the US dollar, just from a technical standpoint. Things don't go through straight away unless it's super data landscape changing driven kind of moves. So we were expecting a little bit of a sell down. Did not expect it to come this hard, did not expect it to come this fast, but whatever, it did. It respected these two little levels, back up on top of it, uses a little launch pad, and bang, here we are again. So, the fact that even though you've got jobs data, you've got the Fed thing, you've got all this other sort of stuff happening, and the market's initial knee-jerk reaction, sell these things, it's still buying it up, and it's still pushing higher. And if we have a look at a lower time frame, you can see it from yesterday. This is where the data dropped. This is where we had CPI, and from that small little miss, and it's not even like technically it's a miss because you got to expect that the market's priced for the data that it is for the expectations, but it wasn't like a drastic miss, and it's not like, oh wow, inflation's not an issue. We got 2.4. It's definitely on the way down. No, it didn't budge, and if it's moving down and didn't budge, it's got just as much possibility to then rise, particularly if you add, like, cutting rates is like adding fuel to the fire. Like, the thing is, it's simmering there at the moment. If you cut rates and drastically cut rates now, well, you can expect inflation to go up. Remember, it's still one of their dual mandates. They can't just ignore that and sort of say, hey, look, no, it doesn't matter. So I think that sort of like the reaction was over the top. The market agreed and bought it straight up. And an interesting thing, which I'll cover with the Aussie as well, there's a thing that I use around these data events called data drop point. Gave it my own name. Basically, it's pretty self-explanatory. It's the point in which price is at when the data dropped. When you get something that sort of shoots it down like this, and then even though you've got this sort of knee-jerk reaction, for whatever reason the market's gone, yep, bang, let's bail out on it. If it comes back up within a very short period, in the case here you can see it's within 2 hours or so, if it comes back up within that session and takes out that data drop point, which is just through here, you can generally expect a pretty strong move to the other side. And that's exactly what we got. We got a break, back test, and then right up to come. I mean, look, that is respecting the charts. It comes up within half a point here, and then market goes, cool, let's sell it off. So, even though it's sort of sell down here a little bit, I think overall it's quite constructive coming into the end. We're at a big sort of breakout point, as I said, above this sort of level over here. We do have an alert sort of set up, 99.27, call it 99.3, just to give yourself a little bit of extra room. But above 99.3, then we jump out to a more reasonable time frame, and we start to look for where potentially we are going up there. So let's put this here, 99.35, because it takes out these wicks. Then realistically, structurally, look, there's little levels along the way, but realistically, this is where you're looking for. Hence the little lines going through here. So above 99.3, I think we see another move up to test 100. And of course, if we jump on to an even higher time frame, we're starting to see, as I said on the weekend, a break of this structure, and they're driving this here. The pressure and the emphasis, now the failure to go up like bottom, top, bottom, top. The failure to get down to this bottom here, i.e. in the buyers have moved up a little bit here, puts the emphasis back on this level over here, which is the 100. And as you can see, should we get a breakout here, we've got little levels at 102, but the measured move of this range, which is the same depth of the range placed on top of it, comes in pretty much in line with these weekly resistance. Actually, this on the daily, but there's a weekly resistance up around 104. So it does mean that we've probably got a fair bit of a move. And if we have a look at this just in terms of where that may be, it's kind of no man's land around this sort of thing. But you know, maybe up around that 61%. I mean, these things are just measured moves. It doesn't mean it's definitely a top. It doesn't even mean it's definitely going to get there. But it's a good target to use. But we could be seeing a move to 104, 105, I think. So anyway, the here and now, what can we look for? Well, I think sort of through this session, as I said, look above sort of a 99.35 or so. That's going to be the little ticker to say, hey, look, we're moving up higher. But certainly, I think it's looking more constructive now than it has for a while. Jump onto gold because gold's putting in a nice little double top here. If you have a look at this on a daily, it's a thing called a pincer top. So like, you know, those tweezer tops, pincer tops, whatever you want to call it. If you can imagine that as like a little pair of tweezers, pincers, whatever, like those little ant things, whatever. That is a bit of a top signal. It doesn't mean that it's sort of like all-time tops, but the fact is we got a big push yesterday and it got slammed into. It put in a technical new all-time high and then got crunched afterwards. It's still within a whisker of the all-time highs. So you can't say, okay, panic stations. But we do have a negative divergence. We do have the pincer top. We have potentially a bit of an overthrow of this high here. So what I've sort of set up down here is I put this alert just underneath this wick, just underneath sort of 45.65. And I think that sort of, should we take this out on a daily sort of time frame? Should we put in a little bit of a top wick here and then we sort of start to see a push down, we take out that wick? I think we could potentially see a little bit of a deeper correction here. And this goes in line with potentially seeing the flows come out of metals and go into the dollar. Now, the correlation between the dollar and the metals is a strong one. It's just been completely void for the last couple of months, really. Like I've always sort of said, I work off a 90 to 10 sort of a split. 90% of the time they run inverse to each other, 10% of the time they run at the same point. That's gone out the window. Like all correlations really in the last year have been, that's what's been made it very difficult sometimes to trade when you're trying to sort of go, okay, well, this is what I know works. And then you're sort of seeing it just completely defy that. And everybody's saying metals. It's just been up. Doesn't matter what happens, it just goes up. So we could potentially, if we see the dollar run, see some flows go into the dollar over the metals. Because I've said this a couple of times, you got to think, like for a risk reward play, you've got all these things that keep screeching higher, 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 higher. That's fine. You know, I mean, obviously it's worked very well, but there will be a sort of tipping point where you kind of go, well, you know, you got the dollar at, multi-year lows. You got these things at all-time highs. This is buying things at all-time highs is kind of like playing hot potato. Like you're just hoping that the next person's going to pay more for it than you paid for it. Eventually that'll run out. Whereas you've got the dollar, which has obviously heavily been shorted for a long time, coming off multi-year lows, even if it does have a bit of a bounce, I think that is what could definitely sort of see some cooling in the metals and that. You know, again, we're not sort of calling like all-time hot tops and that, but you know, it has really been just up and 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 up. We did have a bit of a down week last week, of course, at the top here. But you know, as I said, that's we've got this one down underneath weekly open there. But you know, it has just been sort of running incredibly. I mean, this is on the weekly here, and we're seeing a bit of a negative divergence anyway. So let me just fix this up. So that's on the daily. That's on a weekly as well with a negative divergence. So, you know, you've got negative divergence on the weekly. I mean, look, particularly silver has been on a negative divergence for a while and it's just ignored it all. But, you know, this does look like it could potentially be putting in a little bit of a top here. I mean, even if you look at this, that's that little overshoot that we were talking. This just does look like a little bit of a wedge top coming in on the weekly. So we'll see how this sort of plays out. I mean, obviously, standing in front of this thing's not fun to do, but that's the thing. If we break this sort of 45.65, I think definitely the short play is definitely sort of in line here, and we could sort of have a look at where we could potentially be coming down to. I mean, we've got a couple of levels through here. Must be on 4 hours that I've got these things drawn. So yeah, obviously sort of like previous levels here, and then this would be a big major one sort of down under here. So there are some easy sort of cooling off kind of levels that we could see should this thing break the top here, and it looks like a little bit of a double top there anyway. But look, end of the day, underneath 45, say 60, underneath 45.60, I think this thing could sort of definitely sort of open up a little bit of downside. Silver. There we go. So silver's obviously still kicking on. Well, of course, it's still kicking on. These were the plans, yesterday? Or maybe the weekend? No, it must have been yesterday. I was like, look, if it comes back here, we'll sort of buy it and we'll sort of go apart. We didn't even do that. I've updated it. I had updated this. But this is technically where our high was at the time. And it came back to the 23%. And this is what I say about the Fibonacci. It's sort of like, pay attention to where it rallies from. This thing barely could get down. It's hot to trot, this sort of thing at the moment. And 23%, bang, out to the top side here. Back test and attempted to go up here. Pull this off. But as you can see, it got slapped on the nose here as well. If you have a look at this on a daily, it had a little bit of a bigger wick where we got 86.90 to, I mean, that's a $2 wick on top of this. 2.5% wick on top. Look, it's hard to fault this thing. As I said, it's been negative divergence for quite a while, and that has not mattered to it. We have this little triangle, this little sort of consolidation, favors continuation triangle kind of breakout. It's a bit sloppy, this one, but it is still technically there. Did break out to the top. Look, I could still see this thing rolling over. And I know it seems a bit crazy because, you know what I mean, who's shorting these things at the moment? But, these things will eventually turn. As I said, I'm using the dollar as a guide. I think if we see the dollar run, I think we could see these metals start to come back here a little bit. Should this thing go through this wick and go and continue up, well, I've got no words. And really, I don't know, mid-90s, 100. I mean, anybody's guess is as good as anybody else's because it's all just pot shot stuff when you're up in all-time highs. You've got no historical data. You could kind of say, oh, well, here's the top, link those together. But, you know what I mean? That the market doesn't defy that. It's in price discovery mode at the moment. And eventually it'll hit a roof where, hey, it's discovered where the resistance is and it'll get smashed back down after that. It will come. It's just a matter of, timing it, I suppose. But again, same with gold. Take out at least today's lows. That'll be the first indicator, I would say. I like gold a little bit more for the short here, though, instead of sort of silver. Even though silver will probably outperform in terms of percentages, I think I prefer the setup with gold than this. This is just the buy. What's it called? Buy button. The buy switch is stuck on buy. All right, and finally, just to finish off with Aussie, because Aussie's traded quite well actually. Excuse me. So do a top down here with Aussie. We've got this sort of channel that it was going for. Break, retest, underside, reject down. Underneath 66.60 is where we're going to sort of see a bit more of a confirmation. From there, you're looking down to 66. 66 as a round number and 66.20. So that's probably your next stop. Should we break 66.60? Move this just across a little bit. This little area through here. So, you know what? Let's make it a little price target. I haven't done that one for a while. So this is the kind of area that I'm looking for Aussie to move down into. So what we've sort of got here with Aussie, if you get onto, this is on the daily, so yes, you got structure, you broke, we had negative divergence, it's starting to come off here. You want to see it obviously sort of continue down, see that sort of confirmation of that push down. And as I said, look, it's not part of DXY, but I do think that the dollar is going to sort of, they're buying the dollar up no matter what. They're going to buy it against the Aussie. The Aussie isn't anything special at the moment, and particularly if we see a cooling in metals, that's like its last hurrah. Where we at with US markets? You know, whoop, oh no, I can't drag that across. Anyway, whatever. Point being is that like the US markets are sort of hit like 7,000 on the S&P, slowly dribbling back down, but that's not my forte. Anyway, point being is that if we see the dollar run, Aussie is going to be first on the chopping block. This is a conservative target. This is your main trade down here. If you can get down underneath 66, then there's no real reason why we can't firstly target 65.50, which is kind of like this 61% retracement of this bounce move here. But I would say, depending on how long this, like if we get a major breakout on the US dollar, I think that definitely 64.20 and beyond is a possibility for the Aussie. I've been saying this for a while, but I'll still stand by that. I am short on the Aussie, but conservatively in one sort of trade, in the sort of short term, I should say, 66 is the first target. Should we break here, though, I think there's quite a decent trade down to potentially 64. Below there, we know that that is a super, super support. Even the reaction that we got last time was just a monster. I mean, look at this. For Aussie to move, bounced 5%. That's a big bounce. So you know that this level, I mean, look at the size of the reactions off this level. Like, this is a big level for the Aussie to break 64.20. It's still a little way off now, but again, if the dollar runs, that's probably what I'd be looking for at least 64.20 for a sort of trade through the next month or so. So the short term here and now is underneath 66.60. I think that'll move down towards 66 as a target. I do see this having some sort of reaction, but of course, as always, if you get a bounce here, the second effort is going to be what tells us. And once we get that second effort down into 66, below 66, then that's a further target for us to go to down underneath there. If we get onto a lower time frame, one thing I will sort of just show quickly as well is this data drop point trade. So this is where the data dropped. We put on a half hour so you can see properly. This is where the data dropped. Knee-jerk reaction of the market was to dump US dollar. And this is what I say, that's sort of like, Aussie's not part of DXY, but look at what happened with DXY, look what happened with Aussie. You know what I mean? It's not immune to it. So this is your little data drop point here. And this is within an hour and a half, it was back to where it was. And what happened afterwards? Bang. This is, if you want to trade through data events, this is the trade to do. It won't always happen. Sometimes it'll do this, it'll just keep on running. Sometimes it'll come back and forth, back and forth, back and forth. But if you come back to the data drop point within like an hour, 2 hours, there's a good chance you're going to see a big, strong move to the other direction because the market's digested whatever the data is that caused it to do this. And they said, we don't care. That's just a sell opportunity for us. So it's moved up and people are going, oh, this is great. I was selling Aussie all the way down through here. Now I've got a chance to sell it up above 67 again. Bang. And they slammed it back down. So should we see this continue down, we know where we want to go, but that's one of my favorite sort of trades with a very high hit ratio. This trade from here down to here, like, not necessarily picking this point here, but expecting a fairly decent move to the opposite side of the data drop point. Should that thing break through there. So look, at the moment, it does look like it wants to roll over and come down. Let's see what happens. We've got 20 minutes till Japan comes online, about an hour and 20 till China comes online. If we see metals come off, I think Aussie's going to sort of follow suit with that. All right, that's it from me.